Nigeria's public debt has significantly risen to 97.34 trillion naira, a 10.7% increase from the previous quarter. This jump is attributed to government borrowing and loans from international institutions to finance the deficit in the 2024 budget. Compared to 46.52 trillion naira in the fourth quarter of 2022, the Nigerian debt stock has increased by 118%. The debt is split between domestic, that's about 61%, and external sources, gulping 39% of the debt, with a focus on concessionary loans to minimize borrowing costs. The Debt Management Office remains confident in managing this debt, citing planned measures to boost government revenue. So joining me this morning to unpack this is Tajudeen Ibrahim, Director of Research and Strategy, Chapel Hill Denham Securities. Thank you so much for joining us on Business Edge.
Thank you for having me on the show today.
So let's start with a comparative analysis. Given the recent increase in Nigeria's public debt to 97.34 trillion naira, how does this trend compare to historical data, looking specifically at the pace of growth?
So if we look at the pace of growth, we realize that the total debt grew by 110% year on year in 2023 relative to the level in 2022. And it is interesting to note that that is the fastest growth of the total debt of the country in the past 10 years and even beyond. And if you look at before 2023, the average growth rate of our debt is around 16% per annum. So which implies that the 110% growth rate that we saw year on year in 2023 is materially higher than the average level that naturally we should have seen. And I think we should bear in mind that there was a significant level of devaluation in 2023, and that is what, largely speaking, explains the 110% year on year increase in the public debt stock of Nigeria as at the end of 2023 relative to the end of 2022. So it is largely speaking driven by devaluation of the currency.
Let's put it in a bit of a proper perspective. Of course, the World Bank open data pegged Nigeria's population at about 218 million people. So with this figure as a basis, each Nigerian has a debt burden of about 446,000 naira that ought to be paid. Now, is Nigeria not gradually edging towards the precipice of debt distress and a default, or are there visible ways of paying back and avoiding these and also putting Nigeria within a relative green zone?
Well, I think Nigeria can actually be put in a relatively green zone, because if you look at the debt service, if you look at the debt to GDP ratio, what you have just done now is to look at the debt relative to the population. But let's take a look at the debt to GDP ratio, which is currently at around 42.3%. So one thing that we bear in mind is that that ratio could have been a lot lower at around 34%, if not for the impact of the devaluation of the currency that we saw at the end of last year. We remember that we had devaluation in June, and then after that we saw further devaluation of the currency to end last year at around 900 level. That is what, largely speaking, is responsible. When we remove the impact of devaluation, you will see that our debt to GDP ratio is around 34%, which is materially below the 40% benchmark, which is imposed by the government on itself. So which means we are not really faring that bad, when you bear in mind that that ratio was driven by currency devaluation. If we remove the impact of currency devaluation, then we are fine. But what is very important is to ensure that we borrow responsibly as a country. We borrow to implement projects that can stimulate economic growth and activities. By then, we'll be talking about borrowings that are not necessarily a measure of concern or burden for the country.
All right, let's get it down to the subnational level. Now, we see Lagos, Delta, and Ogun states recording the highest amount of public debt in Nigeria. according to a report. But then we see Ebonyi, Kebbi, and Jigawa recording the lowest debt stock with 70.44 billion naira, 60.69 billion naira, 42.76 billion naira, respectively. Now, looking at the humongous debts that these states owe, are there justifications for these debt portfolio of these states?
I think if we are looking at debt and we are talking about state government, it is very important to bear in mind that the level of debt that you will need as a state will be dependent largely on, number one, the level of projects or capital projects that you are embarking on in your state as a government. And in terms of investing the debt proceeds, it will speak to the level of infrastructure spending that you are carrying out as a state. It will also be reflective of the level of commercial activities or business activities that take place in such a state. So this is what brings my mind to what we have seen with respect to the size of Lagos State as a whole. We bear in mind that this is the commercial center of the country. So it is not surprising that it has the highest level of debt. And I think, the bulk of those, borrowings are being directed towards infrastructure development in Lagos State. And that is what I believe can, drive further business and economic activities to further add to the growth potential of Nigeria as a whole. I think similar thing applies also to Ogun State and also Delta State in terms of economic activities in the Southwest. One can say comfortably that Lagos and Ogun State are on the front burner in this case because you have factories in those two cities, particularly in Ogun State, where you are seeing production of manufactured products that are underpinning the overall economy of Nigeria. And it is not surprising that in some northern states, just like Jigawa, like you mentioned, we have low level of debt because I believe that those states need to convince investors more. I mean, debt investors in this case, in terms of why should they come to those states to invest, particularly given the level of security in those states. And I think until when we see an improvement on that front, we may not see so much in terms of debt inflow to them to support their economic objectives. So I'm not surprised about that disparity between those first three states and the northern states in terms of the size of debt. But to my mind, what really matters the most is how efficiently the state government, the state governors are utilizing the proceeds of those borrowings. I think that is very crucial.
All right, earlier ago you talked about, you actually explained how the debt to GDP ratio rose above the 40% threshold. And of course, you said it's not that bad looking at what is being expended in servicing the debts. Now, in the first 9 months of 2023, debt servicing gulped about 66.9% of the revenue generated by the country. And according to the presidency, Nigeria is said to use about 8.25 trillion naira to service debt in 2024. So I'm asking if that is not bad enough, because if we continue to maintain this level of growth with no signs of abatement, how would a sustained momentum mean for the country's debt stock and sustainability, whereby we have a country that when we talk about security issues, it's not really seeing a positive side, and infrastructural development is not also seeing any sort of positives, and the Nigerian government is not really having any form of conduit that is bringing in a considerable revenue that it can use to buff or beef up its budget. So isn't that a big issue for the Nigerian government?
So let's look at it this way. It will be a big issue if we continue to borrow as a government with the current momentum. I estimate that if we sustain that momentum of around 110% growth year on year in our gross debt as a country, we will possibly end 2024 at 205 billion naira. 205 trillion naira as a country in terms of our debt stock. But I think that will be a careless development, and I do not really expect that momentum to be sustained, because if that momentum is sustained, what it means is that we are still expecting further devaluation of the currency. But as we speak, we are seeing some level of stability on the currency front. And I mentioned devaluation of the currency because if you look at the external element of the debt, it is about 31% of the total debt. If you put it in dollar terms, it is about $42 billion relative to $41 billion the year before. That looks like only 2% growth if you are looking at it in dollar terms. But when you bring in devaluation, what you get is about 104% year-on-year growth in naira terms, I mean, for the external debt. So if we move away from those numbers and how they have played out, and we look at, what can Nigeria do with respect to the proceeds of debt, what I believe is that, number one, debt is not necessarily bad. Number two, debt is good when you utilize it for projects that can stimulate economic activities, projects that can drive economic growth. More importantly, when you spend your debt on projects that can, generate revenue, those revenues that are generated will partly be utilized to service those debts.
Sorry to cut in, Tajudeen, but then every year, every month, we see that monies are being borrowed from these international financial institutions, and when these monies come in, they are not being expended for the purpose for which they are budgeted. We are talking about cases of corruption, budget padding, as it's been alleged, other projects that are said to be white elephants, and other areas whereby we see that these monies are not being channeled for revenue or development or to boost businesses in the country. So if we keep saying that we need to have these funds coming and these funds should be channeled to these areas that would bring about economic growth and revenue, but then we are not seeing the Nigerian government, its ministries, departments, and agencies and other arms of government doing the needful in terms of expending these funds, then what are we talking about?
So what we are talking about is, two different administrations, right? We have the former administration, and now we have a new one. Since we've had a new one, I have not really seen so much in terms of, what can be considered, misdirection of borrowed funds.
So with the buying of SUVs and the payments for the presidential yacht and some other spendings, rehabilitation or refurbishing of the vice president's office and all that, you don't consider those as, spending of funds that are not actually meant for the development of the country?
So one thing that we should bear in mind, I believe, is that, there is always budget for everything, right? The yacht that you talked about now was, under the previous administration, because the news flow that came out much later, made us to understand that it was not in the current administration. The second thing that you spoke about, which is about, the rehabilitation of the VP's residence, I think, one way that one can comfortably read those kind of developments is to understand if it is in the budget or not. What I am talking about is capital expenditure. We need to bring down recurrent expenditure segment or leg of the budget, no doubt. But what I believe that we should be targeting and focusing on and questioning the government on is the capital expenditure leg of the budget. And when we are in a country when you are not really generating much revenue, you have to borrow to execute your capital expenditure. And in borrowing, what really then matters is that you really direct those borrowings to the projects that you set out on day one to execute, not for the borrowed funds to flow into financing the recurrent segment of the budget. If we're talking about that, then you are spot on. For us to really question the government. But if they are directed towards the right infrastructure, then I think they are working in the right direction. So we also need a lot more transparency because we have to work with whatever they provide to us. We have also to be careful around things that are not clear enough to the public. You talk about budget padding, and I think that was cleared by one of the senators, saying that the entire budget is divided into two. The MDAs have their own on the one hand, and then the FGN has its own on the other hand.
Okay.
What I believe really matters is transparency and accountability as well going forward.
All right, Tajudeen Ibrahim, Director of Research and Strategy, Chapel Hill, Denham Security. Thank you so much for sharing your thoughts with us.
It's my pleasure.